All right, we are live here, coming from Virginia. Give me a thumbs up here if you guys don't mind, and let me know that the audio is coming through. Got a pretty cool. I'm following this discussion here pre-party. It's kind of cool. Doug's kind of leading a discussion here on some pretty awesome trade picks here. So just really representing one of many different ways to make money. Listen, so the Independent Investor Channel has obviously been on a little bit of a break. That's going to continue. That's by my choice. I've really needed this personal time to take care of some work obligation. I'm in sixth gear right now. Probably in overdrive a little bit, to be honest with you. I'm working about as hard as I can possibly work right now. But I think to keep this fire stoked on the investing and the awareness, provide this opportunity once a week to come on, allow some of the folks the opportunity to come on and throw their comments in the group. Everybody that I meet in passing, and I interact with people on a daily basis that really have a vested interest in understanding more about not only personal finance, but also investing. And I think the two really do go hand in hand. We're going to kind of talk through the evolution of what is necessary in the preliminary building stages of entering into the stock market, and then some of the preparation stage that you can make. And then finally, some of the implementation plan that you can do. If you've heard of the concept and you're new to the concept and you're tuning into the channel for the first time this evening, I really want to welcome everybody. It's one of those things that if you didn't have guys like me, and I'm one of very few that offer testimonials out there, especially to introduce new investors to the concept of investing on your own. There's a lot of opportunity for you to hear something, be intrigued by it, and then 5 minutes later have self-doubt set in. And it can really be one of those things. It's amazing to me how money does that. It's amazing to me how a lot of other things, a lot of other topics out there seemingly stick, where people hear about it and they think they can do it, they fail at it, and they move on with their life. But money is one of those things that a lot of people are very tunnel visioned on what they're willing to accept as being possible options out there. And I think what ends up happening is you go through those swoons of self-doubt, and then you end up opting for what's been traditionally understood to be access to the stock market. Some of the advanced things that we talk about on the Independent Investor Channel specifically is the opportunity to cut out money managers in your own program. And by making that very, very simple move, and for a lot of people, they think it's crazy. They really do. It's like, man, how can I possibly invest without having the opportunity to sit down with somebody and have them steer me in one direction or another? And as I work through exercises throughout the course of the chronicle of the channel, and offering mental triggers for you guys to really think about what it is that you can do to justify self-directed investing and investing on your own, you'll come to realize that it's significantly more doable than you give credit for, okay? And all I would ever ask is that for new folks coming to the channel looking to explore this option as something maybe they've heard of before, or something that they've never heard of before, but they have enough intrigue to research it enough to understand the pros and cons of both sides of the house. And it's amazing to me, really, this channel means everything to me, in that I feel like this is really one of my callings to do, because I do nothing but validate over and over and over again, whether it be the young people that I talk to in their 20s, whether it be the folks in their 50s and 60s that have given me the insight in reflection to say, Ryan, you're on it. You are absolutely on the pulse of the topic that needs to be discussed now. Keep doing it, because there's going to be people out there that tune into the message and tune you right off. Okay, but there's also going to be those folks out there that tune into the message and their lives are going to be changed. And that is a powerful, powerful thing. We will continue to deliver the information over the Independent Investor Channel as an attempt to reach out and really educate folks as early as we can on the prospects of how investing, and especially the investing landscape, has really evolved, especially over the last 10 years in my assessment, and really over the last 5 years. I've been working self-directed investing for about 7 years and started my accounts with around $1,500 each. Each of those accounts are now approaching $100,000 each, okay? This is real talk, okay? I don't come on to YouTube to fabricate my own story. These are real stories. This is exactly what I've done. So to be able to come on and share how quickly I've been able to accelerate my growth, my wealth by approaching the stock market with a builder's mentality. And this is something that a lot of people may have heard of, but probably haven't, okay? Because I can't tell you how many times people approach me and they say, Ryan, I've got a hot stock pick. Here it is. I can invest in it and I can make 100%. I say, great. That's wonderful. Or somebody will come up to me and say, Ryan, I heard you're the financial guy. I want to make $1 million in the market just like everybody else. Help me do so. All right. Now, both of those tell me a lot about where a new investor is coming from. In the first scenario where you say, I've got the perfect stock pick, I've got the perfect stock pick, my response is always, well, are you fit enough to enter into the stock market? Do you have any debt? How much do you owe on your car? How much do you owe on a credit card? How much savings do you have? Okay. And that's really the preliminary piece here, that we're going to try to answer some questions for if you're sitting out there and you're a new investor and you're potentially in this beginning stage, because a lot of the folks that I talk with are in this beginning stage and they're intrigued enough to stay in the beginning stage for a long, long time. And what they end up doing is looking for any excuse to get out of the beginning stage for fear of what they could justify in their mind as being possible, okay? Once the idea starts to set in that this can be possible based on the testimonial that I provide through YouTube, and for you guys that are new, please consider this an absolute testimonial on how I take and deploy self-directed investing. Now, I'm 41 now, okay? I've been doing self-directed investing for about 7 years, okay? So y'all can do the math on it. I've provided all the tools that you could ever need on every single one of my YouTube videos in way of checking the compounding calculator and assessing for yourself how much currently you're paying in fees, and compare that factor to what it could mean if you reduced or eliminated the fees in your retirement account, okay? This is not something that, this is not rocket science, okay? The information is readily available to everybody out there. It is just completely up to you guys whether or not you want to take, internalize, and run the figures for yourself and have the courage enough to actually answer those questions for yourself. My transition from going from a managed situation to a self-directed situation was a lot different in that I had an insight or an inkling that what I was doing was wrong. I just didn't have the validation behind it. And that's a lot of what the root of the message is that I deliver on the Independent Investor Channel, is to provide that insight on comparing what I had before to what I have now, okay? And the power of a liberated dollar inside the right account is powerful for anybody. It doesn't matter your experience level, and it really doesn't matter about the size of your account, all right? Now, for the person that comes to me and says, Ryan, help me, I want to be a millionaire, all right? I can run the figures to show you that how a 7-figure retirement is absolutely possible, okay? But I say all the time that if you're coming to me and you say, I want to make $1 million, I'll say, well, what's your plan to get to your first $10,000? Because you're not going to make your first $1 million if you're unwilling to script out a plan to get to your first $10,000, okay? And I use $10,000 because I just feel that if you're at all interested in investing, getting to your first $1,000 is easy, okay? It really is. For a lot of you guys that are looking to get started in the stock market, $1,000 can be manufactured right up front in way of a starting amount, okay? So I always earmark that first $10,000 for the beginning investors to say, look, don't prove it to me. I don't care, okay? I care enough to identify that goal for you so you can say, wow, Ryan really put a goal out there that's like a carrot in front of me, but I can't really quite reach it. Listen, I've been there, done that. I know what the first $10,000 goal means to somebody that doesn't have any money in the savings account, that may have a little bit of debt, that may not be making, you know, a healthy salary every year and is pinching pennies to get by. I get it. Why do I get it? Because I've been there, okay? I've been in debt with the IRS twice. I've got out of debt with the IRS twice, okay? I've done penny stock trading, okay? I've lost. All right, so I've made a lot of mistakes in my past, but I still had the fortitude to crawl out of those mistakes and persevere going forward. So a lot of what we talk about is the mental makeup to approaching the stock market, because I have so many people that come to the channel, and I think a lot of people have a genuine interest to want to self-improve, okay? Now, let's put physical fitness and we'll put spirituality aside from it. Financial physical fitness is just one of those small aspects in life that I can absolutely help you with, all right? There are tools that we talk about to help you do just that. There are exercises that we run you through to ask rhetorical questions like, do I have enough savings? Do I have enough savings aside to justify taking a percentage against my cash and putting that into the stock market? In other words, subjecting it to risk, right? Those are some of the rhetorical questions that I'll ask you to compare. Way, way different than some of the other approaches that you save your first $1,000 only to just throw it frivolously at the stock market, and we're not earmarking why we're doing it, okay? You have to be able to set the goals as to why you're putting those dollars away. If you have $0 in your savings account and you're justifying taking your only $1,000 into putting it to risk in the stock market, then you're missing my message. Now, if you listen to my message and you have that $1,000 in your savings account and you say, you know what, I like what Ryan's talking about. He provides a couple of accounts as options that don't have minimum thresholds through M1 Finance and through First Trade. I'm going to get to Bob Wright's question here in the group in just a little bit, all right? But we provide those low-cost entries to the stock market for that very reason, because somebody can take and justify and say, you know what, I want to take 20% of my capital in my cash savings and start to subject that to a little bit of risk. Now I can connect my inflows with my income and maybe start to dollar cost average and provide an inject over here to this low cost entry account. Maybe have the designation over this account as a Roth IRA, all right? And continue to potentially build up over here the remaining $800. The difference in those two mindsets are like night and day. And if you guys are tuning into the Independent Investor Channel for the first time, you'll find that there's a significant, deeper understanding about how to build money, and that I am damn good at it, all right? That's part of the reason why I started the First Trade account, which is approaching $4,000. I told you guys I would build to my first $10,000 and replicate what I know is so important for each and every one of you guys. If you're not up to your first $10,000, I'd love for you to hear me out on this. I started the M1 Finance account with the 11 sector portfolio spider ETFs. That's doing quite well. I think I'm up a couple percent in it. It's doing quite well. I really like how the sector spider ETFs work. I do check it and monitor it. I do not tinker with the M1 account at all. It's completely passive, as is the first trade. I'm dollar cost averaging that account. I have not sold one bit of stock. I've only accumulated shares of stock with first trade. And they all are set up on dividend reinvestment. So what we're going to do is, I didn't have to start those accounts. Okay. I did it to invest right alongside each and every one of you guys. And for the folks who catch the live stream after the fact, after I've thrown down on a live stream basis, that was really the goal, and the aim is to invest right alongside you guys, so we could get to that first $10,000 together. And trust me, that first $10,000 goal is going to be monumental for each and every one of you guys. I want to welcome everybody to the group. The stock market obviously is on fire. We're going to pulse in a little bit. I caught one YouTube video this week, and it was from Joe Carlson, who's one of my featured channels on the Independent Investor Channel, and he did a really, really good job of talking about the yield curve, talking about the frequency of recessions and bull markets, and then also the investor sentiment now, and kind of taking all three of those and putting them together as to whether or not we think we have a recession around the corner. So certainly like to hear your guys' thoughts on it as I pulse in with you guys. Again, I'm ecstatic to be with you. I'm going to cruise up here and see if I can't comb over some of these questions that have rolled. I've got Tim Tellers in the group. Glad to see the live stream is on tap. Again, I'm taking a leave from the channel. It's that simple. I'm not doing uploads. I'm not doing weekly uploads. I'm only doing the Friday live stream, and I will be doing those at least until mid-May, until I am done with my project. I am fully committed to this project, and that's exactly what I'm going to be doing. It's a work-related obligation, and these Friday nights are actually kind of a relief for me, but it also provides you guys the opportunity to come in, touch base with me, let me know what's going on your end. It gives me the opportunity to let you know what's going on as far as progress on my end as well. Certainly, the grand total, the portfolio now, when I started pushing out the portfolio videos at 250,000, we're up over 325,000 now on the portfolio. Really kind of entered into a kind of a time in my life where I'm on a little bit of a savings roll. That's just, I'm aggressively saving right now. I had an inkling to go buy a new vehicle and trade in the Tacoma that I've had for so many years, and have thought better of it now twice. So just to kind of show you a little bit of how devoted I am to my savings program now, and it's showing. It really is. Building wealth in M1 Finance and building some wealth in the first trade account. I'm really kind of disappointed in Bob's experience, and I am going to call them when I do get a chance. I have to be honest with you. My experience with them on the affiliate side of the house, I kind of jumped the gun a little bit because I was confused about what they were doing on the affiliate side of the house, and that's really kind of been combed over, and they've answered all my questions. But I have not heard of any problems with the account. Evidently, they're tied up your money for some reason. I don't know why. It typically takes about 10 business days to get either a like-in-kind transfer or a full liquidation done. So I don't know what they've got going on. That's the first I've heard of it. And obviously, I haven't liquidated. I've just funded the account, so I wouldn't have known on the other side of the house. But we're definitely going to check into that, because my loyalty is with no broker. I don't care if they're an affiliate with the program or not. I do, insofar as the fact that I don't want to see that happening to other people if, in fact, they're just tying up your money for no other reason that you haven't disclosed to me. Certainly they'd hear an earful from me if I had that type of activity going on. But I've been very happy with the platform so far, building wealth inside the platform. I typically try to put the amount into an investment vehicle that I don't need. Okay, so my accessible cash is in my savings account, and I typically try to use that for my accessible. And I actually don't really touch my savings account very often. I don't spend money very often. I guess that's my problem, is I need to enjoy it more. But I appreciate you bringing that to my attention, and certainly keep me posted on the progress. I really think that that's appropriate as well, to keep me posted on and let me know that you're successful in getting 60 days is absurd. I thought you said 30 days to start. But like I said, it took about 10 days to roll my stuff out of M1. So I actually did do it with M1. And they were actually pretty good, but it does take a little bit of time to identify, potentially liquidate the assets within, and then roll over to another account. And then you also have to remember that there's settling time frames as well. So that may have something to do with if you have dividend holders in there and you were entitled to a dividend and you're just after the ex-dividend date, you can liquidate all the money. But from a legal perspective, they're still obligated to pay you funds from when you owned those particular stocks. So what they have to do is they can liquidate it, but they'll keep the account open for 30 or 60, maybe even 90 days to make sure that if a dividend comes through, that they'll continually sweep that account. That's what they did on my M1. So that may be what you've got going on. Not trying to try to give you my best explanation as to why I think that's happening. But you have to remember, stock ownership is a very, very powerful thing. And you have just as much of a legal obligation against that company and against that broker who is pledging those stocks as a holder of those stocks to you. So they have an obligation that if you're paid a dividend after a liquidation, that they sweep that account continually and make sure that it's completely cleared before they close it down. So that may in fact be what they're looking at. But I do apologize for that. That's the first I've heard of that. I've actually had a lot of positive come back, but I've never heard of anybody trying to liquidate that particular account. So we'll catch the live stream going to bed. I don't blame you. It's about what I feel like doing. I don't know how long I'm going to go tonight on the live stream, but I'm certainly going to comb through and make sure that everybody who needs the opportunity to pulse in with me, once a week opportunity, free of charge, they can bounce their ideas off of me, and I'll do my very, very best to answer whatever ails thee out there. Obviously, the stock market is rosy as hell. Doesn't get any better. It's really been quite nice. One cranky day this week just turned right around. I did actually take a little bit of profit today in some stock. Was kind of fully invested there in some pretty good stocks. I had a few stocks jump quite nicely. Stars Constellation Brands was one of them. Reduced some of my industrial exposure. Sold off Emerson, sold off Novartis. Was up really nicely in some of those. Kept some of the other names. PayPal has just been on fire. Cisco was a wonderful pickup. Anybody who took my advice on Intel as a potential chip play, large cap, dividend paying, has obviously made very well on that. Yeah, really PayPal has just been on fire. That's been the real winner for me. But I kept PayPal. I did keep PayPal and Visa, and sold a few other names as well, just to kind of take some profit today. I felt like it was a really good time to go ahead and do that, to take a little bit of risk, a little bit more risk off the table. You guys know I'm still very heavily invested in the stock market, as much value as I can possibly have, but still fairly heavily weighted in the stock market. But looking for my passive accounts to kind of supplement if we do enter into somewhat of a recessionary period through a bear market. I'm really looking for my pension to get hit a little bit, and then hopefully take advantage of some of that by increasing my contribution schedule to my 401k. So always thinking defensive. It's worth mentioning on a Friday live stream after the week we've had. I don't know if there's a lot of people out there really thinking about the stock market ever going down. I sure am. I've been around the block a few times. You always want to be thinking defensively like that to make sure that you're prepared in the event of a potential downturn. So let me get to some of these questions here. I've got the one and only Doug Whitaker, who evidently has an interesting chat group on the side, has offered some stock picks here in the community. I always appreciate that. Really cool. Michael Raver, want to call out, certainly. I'm so ready for tonight. It's been 2 weeks since I've been able to catch a live stream. Didn't really think I was that entertaining. As a matter of fact, I'm here to tell you that I'm not, but at least I am real, which in today's world is a fairly rare thing. And I would love nothing more than to have some new investors pop into the group here. That would just absolutely make my day, because you'd probably see the best of me if I did have the opportunity to have someone that's come in here that's really just brand new to investing. I wish I could film or record some of the sessions that I do with folks on the side just for fun. I do it really kind of as a service. And I enjoy doing that. And I know the folks that have their lives changed by that enjoy it as well. But pretty cool. That's actually where I envision the channel being in the future, is actually filming some of those interactions, because there's really a lot to be learned. I think there's a lot of commonalities across people who are looking to break through and understand more about themselves and what they're capable of and what they're capable of achieving using the stock market or other avenues to build wealth. I think it's super, super important. But great to have everybody in here. Bob Wright's in the group here. Welcome to you. It's awesome to have you. I've got Doug here. I've got Christopher Blaine. Only 10 gallons of sap left to boil. That's awesome. He must be making honey. That's pretty cool. Or syrup. That's kind of cool. I don't know if Christopher's from Canada, but I know they're big on that up there. I do have Brent in the group here, financial investor, longtime supporter of the channel. Once we start to engage or re-engage on the channel coming into the fall season, I'll be a little bit more able to branch out on this project on the Independent Investor Channel. And I'd like to reach out to Brent, certainly. It'd be kind of cool to have a cross dialogue and do somewhat of a collaboration. I think Brent would probably be really one of my top choices to do a collab with. And I think bringing our two worlds together and what it is that we do, I think it'd be pretty fun. But again, I just want to appreciate everybody for sticking with the channel and allowing it to kind of enter onto a plane for a while, because I can't duplicate myself. I just cannot be two places at the same time, nor will I try. Sometimes I wish I could, but I just can't. So I really need to allow myself the latitude to focus in on this project that I've got going on. So Brenny hit me up with a question that's a good one. Hey, Ryan, what are the pros and cons of bonds? Well, the pros and cons of bonds really exist in and of itself. I've really kind of come into my own a little bit on having 10% of my portfolio in bonds. I've provided all those ETFs to you guys. They all come off of the Vanguard, have a good mix of total bond exposure, short-term, intermediate, and long-term. And I try to stay as heavily weighted on the short and intermediate side as opposed to the long side. I've got significantly less exposure to the long side of the house. And the most exposure that I have is in the intermediate bond exposure. I love owning them. I think it's great. I've watched them go up. I'm up in every one of them right now. They really do nothing but go up every single day. They work great as a counterbalance to a portfolio. They are not going to perform like a stock. They are not going to perform like an ETF, a stock-based ETF. They really kind of have a mind of their own, but I am a huge advocate of using bond exposure in your portfolio as a hedge to define your risk, okay? Let me rewind and I'll explain what I just said. If you're choosing to build out your portfolio with 100% stock, all right, there's really no allocation model that accepts that level of risk. I mean, you're way over the ultra risky investor if you're choosing to heavily weight even in stock ETFs. And there's a lot of people that come to me and they say, I just want to invest in stock. I just want to invest in stock. Well, it's easy to be lulled into that type of mentality because over the last 10 years, you've been nothing but rewarded for being a passive investor in the stock market. The stock market does not do what it's done over the last 10 years forever. All right, you really have to think about defining your level of risk, and there's no better time to do that. Bonds allow you to do that. I'm sitting on right now about 11% of my total overall holdings in that suite of bond portfolio that I've pushed out through the channel. I could make YouTube videos, but I push it out through the live stream just to kind of let you guys know I'm enjoying being a bond holder at 10%. It's awesome. It makes me money when the stock market goes down. On a day like today, I think the bond portfolio is down a little bit. So it tends to kind of trade in inverse to what the stock market is doing. And I think everybody should have a little bit of bond exposure. I'm 41, so it is perfectly acceptable to me for me to start introducing some bond exposure to the portfolio. Like I said, man, I'm up in every one of them. And I think there was an interesting comment that came through the Facebook group talking about, Jesus, I bought a bunch of single stock and now I'm down in every one of them. I bought some passive ETFs and I'm actually up in all of them. I can echo that sentiment. I really can. Picking single stock that just go up immediately so you can look in your portfolio at any given time and get the validation as to why it is you did that is very, very difficult. But with ETFs, whether it be some of the ones I'm up in right now in the emerging markets ETF from Vanguard, some of the sector spider ETFs that I'm also up in right now in Vanguard, and then also the VTI, which is really one of the premier flagship ETFs that I talk about all the time on the channel that covers the entire stock market. Also up in that. I did shave back on my VTI a little bit today just because I don't know how much more runway we have ahead of us. And that's really just in preparation and an acknowledgement from the indicators that we're seeing in way of the inverse yield curve, the cycle of recession versus bull market, and some of the other indicators that we're looking at right here, including the unemployment rate. So typically when the unemployment rate falls to max participation, that's typically a sign that we're in for a pullback in the market. And again, I really want to highly endorse Joe's video that he put out. He's super smart. It's just super smart content. I didn't watch the end of it. He doesn't care like me about putting long videos on YouTube, but seemingly he's just doing it because, well, he can. He's really smart. His information is very, very well thought through, and he does a good job of explaining those three indicators. I found a lot of value in it. And again, it was the only video that I chose to tune into. So if he can get my attention, it's certainly good enough to push out through the channel here and offer to my subscriber base, because I think there's a lot of value there to be had. But hopefully that helps you answer that question, Brenny, about the pros and cons of bonds. I really haven't found any type of negative to own it. Obviously, with any type of asset class comes some level of risk. When I bought the bonds, it seemed like they went down every single day. I was down a couple $100, about 4% in my intermediate bond portfolio. And it's since made all that up and swung to the positive up 4%. So an 8% swing from the lows just a couple months ago give you some idea about how well they're doing right now. I'm up in every one of them. I'm not negative in any of those positions. So kind of exciting. And again, a way to kind of introduce some fixed exposure to your portfolio to balance out and really kind of bring you in line with your risk tolerance. Okay, if you're a moderate investor, you shouldn't really be having a portfolio that's completely full of stock. Okay, it's actually kind of a scenario that's impossible to do and do correctly. So you should have some bond exposure. If you're in your 20s, go whole hog, buy some stock. That's fine, but certainly look to introduce some aspect of your portfolio, whether it be outside of the Roth in a brokerage account or within the Roth, to some level of bond exposure. So really good stuff. I'm going to cruise down here and see if some of these comments don't pop in. I've got some really cool folks that just popped in here at the bottom. I'm going to cruise up a little bit. I hope Joe heard me out. I hope he popped in here and actually heard me give that sentiment. I know there's somebody here. I don't know if it was Canine7. I see him in the group here that actually it turned me on to Carlson, but he does a good job. He's working. He's really quickly growing as a channel, doing a really, really good job. I see some names here that I haven't seen for a while, so it's really good to see some of the old school folks. I've got Riley Griffith, Stock Market, another creator here who popped in. So it's great to have you. I always tend to try to give the shout outs to the channel creators. It's just a favor of mine that I do for you guys. And I just want to cruise up through here and make sure that I start from an area here where I'm covering all of these questions. This is pretty important. All right, Andrew, your videos are great. Yeah, Andrew's started making a YouTube channel. That's pretty cool. So Andrew Trapman, Trading, Investing, and Motivation. Good stuff. Spreading the wealth of awareness when it comes to investing. I thought for sure he said that he was kind of into gold and silver. I don't want to misspeak, but certainly you guys are welcome to kick over. Check out that channel as well. Ray MC, evening from Korea. It's 10 a.m. here. You're a great motivator. Woke me up, brother. Yeah, I got to be honest with you. There was a time in my life when I needed an awakening as well. And that comment really resonates with me. It really does. As long as we're waking people up to good stuff, you know. I don't think investing is for everybody, but I think everybody should invest. I've said that many, many times. And if you guys really try to understand the root of what I mean by that comment, I think there's so many people out there that overthink the simplicity of proper investing. Okay. There's so many people out there that undershoot their own capability. Okay. I think there's a ton of people out there that will look for every excuse to talk them out of investing, because unless you really embrace the idea of being a stock owner and a stock investor and understanding what it means to own, even if it may be a small piece of a company, how important that is. And if you own multiple pieces to your portfolio and you can enjoy some of the appreciation of that company going up over time through a dividend, and you can piece all of those, small as that they may be, wealth building techniques in one little package, and you do everything that you can do to protect the integrity of that, it should motivate you. It should. Because if you've done nothing else over the catalog in the last couple of years, the Independent Investor Channel, you know nothing short that I am very, very intense about this. And I think I'm even more intense, not only about the prospect of investing, but how so many people out there get it wrong. They get it wrong. And a lot of people don't get it wrong because they don't want to invest. They get it wrong because they're misguided. Okay? That's key to me. There is so much money being made in this industry by keeping people in the dark, not providing the truth, not providing options, and it all comes down to compensation. It all does. All the commercials on TV talking about this very thing, about the importance of coming up with a comprehensive financial plan, and they speak so elegantly as if that stuff is worth hundreds of thousands of dollars. It's not. It's not, okay? Your access to the stock market can be streamlined, or it can be dressed up with a bunch of frizzles and frills. But for those folks out there that think that because they're with a financial planner that they have a strategic edge over me, this is your wake-up call, all right? I will absolutely run circles around those folks every single time. There's no way their program can compete with mine, because we're directly connecting people to the market and eliminating the compensation piece. Remember, cut out the middleman. All right. That is so true when it comes to investing. It is so true. All right. So good to have you. I'm glad. That's a great comment. I really appreciate it. I know we've motivated a ton of people as to the prospects of investing, and I know they're turning on a lot of the friends as well. That's where a lot of, I'm looking to grow the channel through referral. Very, very important to me that if you feel a connection with me and what I've went through and what I've done for myself in building wealth, that you can bring somebody on and trust that they're going to have the same experiences as you have, right? Because I do a pretty good job of providing transparency as to where I was and where I am now and where I'm on track to go. Very, very important when you're thinking about identifying an investment plan that fits you, okay? And I separate this difference many, many times. I share the investing plan that works for me, okay? I have a portfolio that's very heavy-handed in dividend-paying stocks. That's just the way I want to invest. I have a very secure job. I have a very secure retirement pension. I have a very secure employee-sponsored retirement account. I can afford to take some of those risks because my job is so secure. So the counterbalance of finding that right mix of plan that reflects you is really the secret sauce on the Independent Investor Channel, is throwing out enough rhetorical question to where you go through the list of rhetorical questions and you start to answer those rhetorical questions and you feel solid in taking that next step in actually deploying the plan, okay? And that's really this preparation stage, is where you're asking those rhetorical questions of yourself. What accounts are out there? What investment products are out there? What type of investor do I want to be? What would be my risk tolerance in the stock market if I was to go ahead and take the leap of faith and enter some dollars into the stock market? What do I want out of investing? You know, do I want to be a self-directed investor, or do I want to enter into a managed situation, right? So I've got a little homework to do to understand the benefits, pros, cons of this side of the house. I've got a little bit of research to understand this side of the house. And I do a lot of the research for you. I provide a lot of the answers over here, and a lot of where you need to kick over rocks and look for those answers, especially on the managed side of the house, okay? The downfalls of self-directed investing are such that you don't have a counselor, okay? You don't have somebody to go into and get that reassurance for them to tell you the market's down 25%, but just stay the course. If you need that reassurance, then self-directed investing is probably not for you. But I would go one further and say that if you need that reassurance from a financial planner, it would probably be better off for you not even to invest at all, okay? Because that's how much money you surrender by going with a third party, going with a financial planner, okay? And they're all bundled up differently, but they all ultimately are aimed at providing service after service after service after service, all meant to whittle your money away. Okay, that's all that it's designed to do. Okay, and they sell the whole "I have your best interest in mind." They sell this whole "we are better than the next guy, we are different than the next guy." The commercials on TV are so patronizing, it's amazing, but they're all trying to separate themselves from each other. And you've got me on YouTube talking to 13,150 subscribers saying, hold on, time out a second. I call BS. I call BS. I'm sorry. I see right through it. You can read between the lines for yourself if you just have the opportunity to look at the situation through a different lens. Very, very important. All right. Chuck M says, Ryan's the man. I am a man. I'm 41. I'm getting older, but I sure am happy, and I'm working my ass off right now. I need a vacation. There's no doubt about it. I'm gonna maybe do a vlog. I don't even know what vlog stands for. Does anybody in the group know what vlog stands for? Evidently, it's some. See, I typically rely on the 20-year-olds that I work with to keep me pulsed into the social pipeline so I don't look like an idiot. But I'll probably do some vlogs from my next vacation destination, which is already planned, and I am looking so forward to it because I am overdue. I typically do not go this long without taking a vacation, but right now I am pushing and I am in overdrive. There's no doubt about it. So I subbed but didn't see a sub count. I was just wondering. So the financial investor reached out, probably sub to Andrew Trapman or one of the other channels, probably Riley Griffith as well. That's really cool. You guys are making those connections, growing the community. I'm all about it. That's really cool. Really cool stuff, man. Excuse me. Financial investor, not yet. Getting closer and closer every day. Got to get to where you're at. I think we've got about the same size channel. I don't know where Brent's at. I don't know if he's got a few thousand or if he's approaching 10,000. I'm not really sure. I know Dave is up over 10,000. That's pretty cool. I don't know. It's a business opportunity that has unlimited upside potential with very little downside potential. It's not like there's a lot of overhead with a YouTube channel. I mentioned this before, but I would also say that if you're going to do YouTube, don't be a faint of heart. You better love what you're doing. Otherwise, people will see right through you. Pretty cool. And you gotta have the energy to keep going too. So I know Riley's been supporting the channel for a long time. So I ought to kick over and subscribe if I haven't already. I got to be honest with you guys. I don't spend a lot of time looking at other content. I really don't. I'm doing Ryan Scribner a favor right now. I was one of the 10 chosen to review his new course. So I'm humbled at that opportunity. And he's going to get my best effort in that. I'll probably release a video as a favor to him to give him some good feedback on that piece of content. And I'm going through it with a fine-tooth comb. It's really, really good. God dang, it's good stuff, man. It's freaking good, man. I mean, if you can justify spending thousands of dollars to go to college, but you can't justify a few $100s for the course. I don't know what the cost of the course is going to be, but I'm really fired up. I'll probably enter into more lessons after I get done with this live stream because I just don't have a lot of time. He probably hit me up at the worst time, but I told him I would do it. That's exactly what I'm going to do. I'll provide that feedback, and hopefully I can pulse you guys in on the results of that particular piece of consulting work I'm doing for him as well. So kind of exciting. One of the 57 things I've got going on right now. So good stuff. Let me cruise down here and make sure. Coco Jumbo says hello from Seattle, one of my very favorite cities in the whole world. Awesome stuff, man. Geez, I wish I was there. Yeah, man. Spent a lot of time in Ballard and Fisherman's Wharf and Lake Union and Gig Harbor and Tacoma and Everett, Snohomish. So Coco knows where Snohomish is for sure. So good stuff, man. Ryan, are the Roth contribution limits above and beyond 401k limits? I.e., can I put 19,000 in my 401k and the 7,000 or whatever for a Roth? Yes, they are. At least for mine is pretty cool. I've got 19,000 for my employee sponsored of a Roth variety. And then also for my individual Roth as well. And you're forgetting as well the additional, and it's not 7,000, it's 6,000 this year for you if you're single, and also for your spouse. Okay, so don't forget that. So add that additional 6,000 on top of that. Anyway, yeah, right below you, Financial Investor, gave the same correction I just gave. So thank you for that, Brent. I appreciate it. Eyes of the Goat, what percent of my portfolio should be in cash at this point in this market cycle? I'm thinking 20 to 25% at least. Any and all comments are welcome. I'll take your comment if you don't mind, unless you want the group to respond to you. But I think it's a hell of a question, and it's a golden question. It really is. I was sitting on about 12% cash for a while until today. Today, I felt like I was given a gift of opportunity to go ahead and take some more risk off of the table. I was up in every single position I took off the table today, probably upped it to around 20 to 25%. So right in that range that you earmark. With that said, there is no right answer to this question, but you asked it, and it's a good one. And I can guarantee that there's other people out there asking the same question. And here's the beauty of it. You're asking the question because it is such a prudent question. There's so many people out there that are down on owning cash. Cash is a crutch. Cash will, why not just invest your cash? You're young. I just look at things differently. Okay. I look at separating those two in your mind and look at your accessibility, liquid, static. Static, meaning it is not subject to market fluctuation. I just think there's so many psychological and inherent benefits to keeping that cash available to you in the event of an emergency that I'm not a proponent, even as young as you are, because here's the thing, there's a lot of psychological benefits that can come out of proving to yourself that you can not only invest on a DCA program, but also save cash on the side. If you do not have the ability to save cash on the side, then it doesn't do me a whole lot of good to sell you on the importance of investing. If you just look to it, jump on the investing bandwagon and then someday supplement your cash, it just doesn't work that way. Wealth creation doesn't work that way. Without the adequate amount of cash, how the heck are you supposed to take advantage of a market dip? We just had one 5 months ago, right? How are you supposed to take advantage of those opportunities if you have all of your money invested in the stock market? So I think I'm about that right there, maybe closer to the 20% mark, but I did take some serious risk off the table. I could probably log in and tell you what the sell orders were today. It was actually kind of interesting. Let me log in and I'll pull up my sell orders. And I'll just tell you guys what they were. I just had an inkling that we were kind of given a gift today with a 200% influx for no good reason. There was no reason at all for the market to do what it did. We had some hawkish statements in the morning with regard to the interest rate. There was one talk today about slashing interest rates, with that, which I was like, oh my God, what the hell are we talking about? Interest rates are historically manufactured low right now. I thought that was kind of a crazy idea. So right now it's pending to cash, so I can't tell you. It was 10% before today. But let me bring up these sell orders. So General Dynamics was parlayed. That was an attempt to reduce my industrial exposure. Sold some VTI today, kept a very small position in VTI. As a passive position. Emerson Electric, again, I was overweight industrial, so took the profit and trimmed down on the sector exposure. Novartis, Lowe's, Starbucks, took the profit there, valuation high. So went ahead and took the profit in Starbucks. That may hit some of you guys. I know some of you guys probably hold Starbucks in the portfolio, but again, I like the company. There was no other reason to sell other than, for me, it made sense from a positioning perspective. Home Depot, American Tower had a ratings change, and at 195 at a 40% forward PE, decided to go ahead and take 10 shares off the table of A&T. I'm left with 5 shares. I'm good with that. I'm going to allow those 5 shares to work. Not a huge position, but decided to take around a 14% profit off the table in American Tower. FedEx came back and went into the positive today after its poor quarter last time. Some of you guys are going to shoot me in the foot, probably K97, for taking good profit in JD.com today. I'm good with it. I'll roll. I'll live to fight another day. That's fine. That was really aimed at taking some of my growth exposure off the table. Again, no other real fundamental reason to sell JD.com other than just that. Remove some risk from the table, take some profit. I'm a winner. Okay? Live to fight another day. Is JD.com probably going to go to 40 before it goes to 20? Yes. Okay? But my thought process is very, very simple. Okay? Tax protected dollars within the Roth IRA, took the position in JD.com. I took profits outside the Roth before I put it in the brokerage account in JD. So I double profited and channeled the stock twice. I believe JD.com took profits both times. Okay. Stars Constellation Brands took a big profit in that. It was up huge today. And then AVGO, which is Broadcom, very, very good from a valuation perspective. Could have stayed the name in there, but dipped over 300. I took it on a really nice upswing there. So those are the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 liquidations that I took today, just for interest's sake. Those are real. I didn't just make that up. Those are real positions that I took off the table today. All right. Would you recommend converting the Roth TSP over to a Roth IRA upon Social Security age of 62, 67 retirement, since Social Security uses the TSP as tax reportable income versus Roth IRA isn't calculated? I just think it's cool to have that option, to be honest with you. A lot of people don't know that you can do that. Me personally, I'm probably not going to do that. I'm really not. I love the transferability. If you're eligible for the Roth TSP, a lot of people, you're still eligible for the Roth TSP, but under the new blended system, right, you matched dollars aren't eligible to go into the Roth TSP. So you're not able to contribute like we are, where 100% of the dollars that we allocate go into the Roth TSP bucket, okay? So they're splitting the TSP now, and they're having the traditional bucket and the Roth TSP bucket, just like before, but they're giving you more freedom and flexibility to take withdrawals from where you choose, okay? Whereas before, they actually forced you to take the traditional withdrawals first so they could get the tax, of course. That's the only way that the traditional would work in that particular sense. But the laws are changing in 2019 with regard to that. I would just stay the course. If in fact your TSP runs up, you do have the option to take 100, 200, 300 of white meat, roll it into your individual account. I'm not sure what benefit that would be to you, other than for the reason that you point out there, for tax implication. But obviously I'm not a tax accountant. It could be beneficial, but probably more important to pose their way. But I just think it's cool to have the option to do so. I really do. I mean, if I'm sitting on 500,000 in my TSP and I'm sitting on 1.5 million in my individual account, I don't see much reason to liquidate the TSP and roll that into my individual. I like having multiple buckets. I really do. And for somebody that's tuning in for the first time, they could come back and say, Ryan, you're killing your compounding effect. I could care less. I don't trust the stock market enough to just put all my eggs into one basket and just hope that someday the market's going to go up every single year enough to not subject me to a 2009 downturn and cut my portfolio in half. I'm more of a realist than that. And that's real talk from me. That's just how I choose to invest. All right. I don't trust the stock market. Sorry, don't do it. Let me cruise down here. I only contribute 5% to the Roth 401k and max the Roth out right now. So yeah, Brent does something similar to me. I do 10% in mine and then max out the Roth IRAs, both of them. So me and him are on kind of a similar program. Some money matters. Yeah, no thanks. Thank you on Lyft. Not right now, at least laugh out loud. Eek. No kidding. No thanks, man. Are you kidding me? The burn rate of that company is enough to just push me onto 100 or 150 other companies I'd rather invest in. Good grief. Get crazy and invest in Caterpillar invest in FedEx, or, you know, I don't know. Everybody's down on Boeing. Everybody was up on Boeing 2 months ago. You know, I mean, it's the same company. It's going to still make airplanes. They're still going to have a backlog of airplanes to fill. And guess what? That's exactly what they're going to do. So I don't know. Plenty of other different better options out there. Lockheed Martin. Just, you know, come on, guys. We're better investors than that. You're going to see those high flyers come. You're going to see it on a day like today where the market's green. It's up 11%. But you don't misinterpret investing as needing to be finding that next best thing. Okay, that's such a shallow way of looking at investing. It's not even funny. You'll typically fail if you end up looking at investing in that way. There's a pharmaceutical drug that's in phase 3 of testing, and if it does end up coming to market, the stock is going to go up 50%. I don't invest that way. I think it's a silly, careless way of gambling, to be honest with you. It's not investing in my particular assessment. You can win sometimes, you can lose big. You can win and lose big with just regular investing in value, you know? So just be kind of careful getting in that type of mindset. So no, just separation there off accounts. I swear, we do the same stuff. Laugh out loud. Like exactly. 5% to match Roth, 401k, max Roths, IRA, then dividend invest the rest. That's awesome. Mimi, thank you so much, man. That's so unnecessary. I did get your emails, but I got to tell you what, man, I have been so freaking busy. I have you on the shelf, no doubt about it. I do want to touch base with you at some point in the future. I know your plan is going really, really well. I read every one of your emails, but I have not been responding to chats on YouTube. I've really been indisposed to my project, and I know you have as well, but I so much appreciate that. Really do appreciate it. Not really sure. I received some compensation a couple weeks ago through the live stream, and YouTube seemingly takes a pretty big chunk of that tip. So if you guys feel like providing me a monetary gift, do so through the Facebook group and just send it to me via PayPal. That's just some real talk. I do appreciate it. Everybody can see the support, and I like that. That's awesome. I'm humbled. It's unnecessary. But certainly that's kind of why I set up that option in the Facebook group as well. That if you wanted to go on there, now I'm going to feel obliged to offer some more financial coaching, because that's honestly what I feel like I'm really good at, is financial coaching. I don't believe financial planning is even necessary anymore. That's real talk. I think people getting to believe in themselves from a financial perspective, I think that's key. I think helping people identify a plan that makes sense for them, that's key. You don't need a planner for that. Sometimes people can use a coach. You know, you can use a life coach for a lot of different things. You can use a spiritual coach for a lot of different things. A lot of people, just like myself, at certain times of my life, couldn't do certain things on my own. I needed somebody to push me a little bit in one direction or another, or uncover an option for me that I didn't know existed, right? So that's the beauty of it all, man. And that's really what makes the world go round. Mimi, thank you. I'm in debt to you. I really am. Thank you. It helps support the channel. And for being off, you know, the channel's taken a little bit of hit as far as the growth goes. It is still growing. And there's a lot of people come to the channel brand new. That's fine. If they're interested in the content, they will stick around. If they won't, they will move on to something else. And I am totally freaking fine with that. I don't owe anybody anything, okay? I do this because I want to. I do it because I know the potential impact for folks out there that really do need help. Why do I say that? Why do I say people need the help? Because I myself am evolving as an investor. So if I'm evolving as an investor, then everybody here in the community is also evolving and becoming a better investor themselves. And if we continue to further the dialogue, that's exactly what we're going to continue to do. Again, thank you, man. I hope everything is good for you down there in the Sunshine State. Very cool. Good stuff. Let me cruise down and make sure I'm getting all these questions. We've been going over an hour. And honestly, I can go for an hour. It feels like about 5 minutes, man. It's really cool. I sure do enjoy this. It's definitely a break from the overdrive I've been working. I've really been killing it. My project productivity has been at an all-time high for me. I've really never been prouder, but I've never worked this hard. It's been a very, very rewarding and challenging 7 months for me. All right. And that's the reason for the break on the channel. And again, I thank everybody for your latitude. I recorded a vid, but never released it, about how I pay myself for my LLC. Oh man, financial investor, man, the guy's smart. He's smart. I love associating with smart people. It's a good thing. So Golffish says greetings from Florida. That's the second call out that I've got from Florida. Awesome. It's great to have you on board. One of the very, very first followers on the channel. So very cool to have you. I signed up for T-Mobile and emailed them, but I need their wireless plan to get 4% APY on checking accounts. It's funny. You guys can get all kinds of information on the Independent Investor channel, not just financial information. That's funny. Florida weather sounds great right now. No doubt. Still daily cost averaging into my M1 Pi Roth. Yeah, so found it is easier when I don't even look at news. Wow, that's a very, very legit, very, very smart comment. I really like that. And if there's folks that are going to be tuning in, I'd really like to put a little bit of emphasis on that was said. I enjoy that. It's actually kind of a healthier way to invest, honestly. My active accounts, I choose to have my hands in the honeypot, and I do outpace the market, but I work really, really hard to do that. I really do. But the amount of work that I put in, does it justify the amount of alpha I do end up earning in the stock market? I don't know, probably. I really wouldn't have it any other way because it fits my personality to be that active over my accounts. But I do enjoy having the other aspect of the M1 account. It actually allows me to initiate dual perspectives and dual approaches and teach upon those different dual perspectives in each of the accounts. I've always said that M1 Finance, I believe, is tailor-made for the passive investor. I really do. Just like Betterment. It's the same thing. Betterment just has the managerial layer on top of it, right? The robo-advisor piece. So each individual account is going to be different for whatever your needs are. If you want the managerial piece, you go with the robo-advisor. If you didn't want that aspect or that layer of it, you go with the M1, go with one of their professional pies that they have, or do it like me. I custom built the 11 portfolio sector, 14, 13, 12. I gave you the percentages, I think, last week on that sector portfolio, but I like how it's performing. I enjoy it. It's a lot of fun. I prefer Marcus slightly higher rate for me. And then, okay, so you guys are talking amongst each other. I'm stuck in DC at the moment, unfortunately. Oh, that's too bad. Recession, you mean a sale? It could be. I'm talking recession, actually. I'm talking first bear market, and then I'm probably talking a pretty deep recession. I do probably sense, and I'm just using my instinct, which I probably be wrong on, but I have an instinct that this is going to be a pretty big rubber band effect and may push us into deep water that we haven't seen before for a while. Okay. And that doesn't mean that because we enter into a recession that it's going to be quick. Hopefully we enter into the recession, and Carlson talks about this on the video, that he thinks that 2009 was a really unhealthy correction. I couldn't agree more with him on that assessment. It was nothing but healthy. There was systemic cracks in the system that were causing those signs of chaos and panic in the market. The subprime lending scandal was the big thing. General Motors, that didn't help either. So you had a couple of forces really kind of coming together to cause that panic selling. And those are the flash crashes that are painful. They really are. if the stock market does end up going on sale, I'd like to see it adjust down a little more healthy, a little bit more slowly, perhaps maybe over a prolonged amount of time to really get a good, healthy flush out and a recalibration of stock prices. Whether or not I'll get what I want, I don't know. I'm prepared to profit either way. It doesn't really matter to me. I'll continue to monitor it. I'll still continue to stay invested, and I'll still continue to build cash, which, to be honest with you guys, if you want to take away the one initiative that I've got right now, that I've got the most focus on, and that's building cash, okay? I don't have a lot of focus on redeploying a whole hell of a lot of new capital to the stock market right now. But I am really being aggressive on saving every bit of cash that I possibly can. That's just little insight from my perspective right now, March 29th of 2019. I don't know what the following months are going to hold, but that's just what I'm doing right now. I bet on a soft landing and a long runway. That I agree with that, only from the perspective that I think we're looking at a very, very healthy economy, okay? The stock market is equally as healthy, that's for sure. But I think we are getting some indication of a healthy economy. Unfortunately, some of those indicators can typically lead to recessionary times after those pass, especially the unemployment rate. Very interesting stuff. The affiliate pro. Okay, the affiliate pro. Okay. Goldfish says I'm moving one of my accounts to a more passive approach, VOO, VO, VB, and VWO. Any thoughts on this approach? So I think it may be one of the most perfect ways to invest. Furthermore, I think if you're new to investing, that can be one of the most simple ways of getting a really nice passive base in the market. I was a little bit confused in the potential for overlap between VOO and VO. Upon further research, those two have actually very little overlap. So interesting enough, you're actually taking a very big bite out of the S&P 500. On the large cap side of the house, large cap value and growth, obviously the 507 in the Standard & Poor's. The VO, which if you read through some of those holdings, you're probably not going to recognize a whole lot of those. And it's even worse with the VB, with the small cap. But if you're looking for a passive base, a good passive base, give you exposure to just a ton of really a few thousand companies. I can't remember for sure what VB has in it, but I think it's a few thousand in VB. I'm not sure what VO has, but obviously VOO is 507. That's a lot of nice diversification. I'm actually invested in VWO, and I'm making a killing. I've channeled it twice. I sold it. It was up 8%. I took the 8% off. It went right back down to 40. I bought it again. So I like it. Obviously, I like it. It's made me good money. I bought it when emerging markets was really, really at a nice buy point. It had really been depressed for a while, but I really like the Vanguard emerging markets, and I do currently own it now. I obviously own a different version of the C fund, the C fund in the TSP as opposed to owning VOO. But I told you guys I liquidated a small piece in VTI. So I would just say if you're going to go passive right now, definitely scale. If you've got enough money to buy 10 shares of VOO, for example, buy 2, okay? Because we've set you up with brokerage accounts that offer free trades. You can dollar cost average into the ETFs as the market corrects, okay? Or you can dollar cost average into them over time and win either way. What I don't want to see is you buy 10 shares of it and take a nice haircut on $2,500. That's gonna sting a little bit, right? We can avoid it. There's no reason to do that. There's no reason to put any type of large capital to work in the stock market right here. When I say $2,500, $2,500 could be a large capital reflective to your total overall holdings. $2,500 is a lot of money, guys, right? So if you're a new investor and you're like, dang, you know, I've got this $2,500, what should I do? Should I take the whole thing and throw it on VOO right now? be a little bit more strategic about your approach, man. You're not going to make that $10,000 right overnight, man. So take a little time, okay? Allow your money to work for you. Allow yourself to become an investor. Really super important, man. I dollar cost average each week. One week I buy in my individual stocks, and the next week I average cost into my ETFs. And I stay away from CNBC and other TV interviews. That's really cool, man. Common backs. It's a really smart comment. I got to be honest with you. CNBC is my guilty pleasure. I don't have a problem. I don't act upon the information. I typically don't watch the commentators. I'm actually watching the ticker tape. I always have, and I read the ticker tape. So I'm actually looking at where my stocks are as they're declared in real time in the tickers. I could really care less about what the commentators say. They're on there for entertainment, but my attention goes to the ticker tape, and that's really my guilty pleasure. If I was on an island and all I had was one channel to choose from, I'd probably choose CNBC for that reason, because I'd want streaming quotes. Yeah. First trades are tough cookies. Not military friendly at the start. Can't discern APO, AEAP addresses. Since that barrier, nothing deposited may just stay. So Ray MC, interesting. Thanks, Ryan. I made no trade. Just was checking the time of moving money. Oh, okay. Interesting. That's interesting enough. That's good that you don't have any money subjected to it. I'm going to be honest with you. I've got about 3,700 and change wrapped up with them. So, you know, I went through this difficulty with the M1. So just trying to shed a little bit of transparency on what I went through. And that account is still open, mind you, for that very reason. Because if you have the capital in there for some amount of time, you're entitled to those dividends like I was explaining. So that's good. You're not out any money. Good stuff. Goldfish with one ETF. I go 50% stock, VTI, VEU, which is foreign involvement, 25% in bond, BND, BNDX. Pretty good stuff. Thank you, Greg, for that offering. That's a good way of splitting up the world. I like it. Got a little fixed equity exposure there in the VNQ with the European markets, I believe is the VNQ. So been going about an hour and 20 minutes now, guys. I'm gonna still continue down. See if I can't get through all these questions if I haven't already. Aim for an hour and a half tonight. I typically go over. That's fine. You know, I do that for you guys to make sure we're thorough on getting you all the answers you need. Do you still own Wells Fargo? I do. I do own Wells Fargo. I thought about selling it after hours when it spiked, but really just not hurting a whole lot in my portfolio. Healthy dividend. I think the CEO stepping down is actually going to be a positive. And I do like owning it with all the other major banks, JP Morgan, Bank of America. I do own Citigroup as well. The valuations are quite good. And the book of business that Wells Fargo has, really the reason why I invest in Wells Fargo has nothing to do with the small accounts that they hold. It has everything to do with their large book of business. So you guys look into it. It's quite good. They just need to get their act together on the management side. And I believe they've taken a positive step in that direction. So I'll continue to make the 2.5% dividend until the 3%. I think it's 3% on Wells Fargo until that. It's not hurting me. I'm good. It's not going anywhere. Valuation's good, less than 10. So actually a little more expensive on Wells Fargo than some of the other names. Bank of America is probably the cheapest out of the group. So what is your favorite of the Chinese internet stocks? Baidu, JD, and Baba. I like them all. I do. If you guys are looking for a small piece, you know, of the action with growth, my favorite's probably Baidu, but those are my three favorites. Okay, the only one that I own I don't own any of those three anymore. I still own China Mobile because of the fat dividend, and it's made me back all my money. And I'm just kind of sitting on it like a bond holding. And if I get some capital appreciation out of it, so be it. I'm happy with that. But I scalped Baidu, JD, and Alibaba over the last couple months. I've really channeled those stocks really nice. I was on a hot streak. I did quite well with those all three of them. And I finalized that channeling activity today, with my liquidation at JD.com. Alibaba, I missed out on 4 bits of appreciation today, but no big deal. I don't know if I would buy it right here. When it was at 140, I was buying the hell out of it. So that's just what I did. Now it's approaching 200, 190 right now for Alibaba. Just be a little bit careful. You know, if something doesn't shake out with the China trade deal, you might want to be careful with exposing a lot of risk to those 3 names right here. Baidu on evaluation is probably the best. All right. Ryan, I found my tax return and we'll get 2,300 and advice on how to invest. Don't be afraid to take a nice chunk of that 2,300. You know, it's so funny how I look at an amount of money and I look at it and I say, well, what would I do with it? I'd take $1,500 and put it in the savings account. That's just me. I don't think this market is screaming that it needs to be bought. I know it's easy to look at the stock market when it's green every day and say, man, I want to buy. It's actually the opposite approach that you want to take, you know. That's why I kind of felt like I was, again, one of the lone sellers in the market today. I snuck in there right at around 3:30 in the afternoon, and I took those 12 liquidations right off the table. I was happy to do so. It's what's considered a strong move in the stock market. And that's a lot of the reason why I've manufactured a lot of money in the stock market. A lot of the reason why I'm approaching the money that I am, $500,000 net worth on a military salary. So that's just what it is. I'm not going to apologize. That's just what it is. Great, Kemi. Good to know. I will be adding bonds later down the line. Yep, good stuff. I really appreciate that conversation. That's good stuff. But Tim, it kind of depends on, you know, how satisfied, what type of performance that you've got on the rest of the portfolio. You know, if you wanted to beef up on some positions, you certainly could do that. You know, $800 to give you a nice little inject there. If you wanted to do more, you could do 1,000 and then 1,300 invested. You could do something like that, but don't ever forget those injections into the cash account. I ended up getting $4,600 back this year, and the $4,600 this year went all into the savings. I did the contributions, max contributions this year, $12,000. That went into the Roths, that's fine, but to kind of help and supplement and backfill some of those contributions to the Roth, I just went all cash into the savings account. So that's just what I did. So spending the weekend at Malipo Beach, Korea. Nice morning break here. Good chat to boot. Good stuff, man. Ray, it's great to have you in here. Appreciate it. David Math has been with the channel for a long time, man. Good to see you, Ryan. Nice to have so many channel creators with us weekly. That is true. I encourage it. I do what I can to help those folks. I know people have helped me, and I certainly don't mind returning that favor. I wish I could do more in way of some collaborations, but we'll see. The channel's not going anywhere. We'll collaborate at some place. I'd like to do a live venue. That's my thing. Collaborations are one thing. I know Nate just got together with, what's his name, the little fella, Graham Stephan or whatever, but I don't think it did very well. So, you know, okay, if you're going to go with a golden channel, does that automatically mean that you're going to have overnight success? I don't know. I still think the quality of the content still has to be really good, and I don't know if that piece of content really resonated with everybody. I don't know. It may take off because there's the name recognition there, but we'll see. Who knows? But I agree. I think it's great to have a lot of the channel creators in the group here. It's good stuff. Do that collab with Brent. Yeah, I think that'd be fun. I owe Brent more than anybody on YouTube. I think Dave has been really loyal as well. Dave's not in here tonight, but Dave's been extremely loyal. Obviously done, you know, the only collaborations I've done have been with Ryan Scribner. And I've enjoyed both of those. The first one, it wasn't very good. I wasn't happy with that content. The second one I thought was pretty good too. Was good. I was happy with that. With 5 dividend stocks to buy, that was kind of cool. But yeah, you're right. I think doing that with Brent, I think that'd be fun. I think it'd be fun interview style. You know, I'd like to be able to kind of pick somebody's brain a little bit. Just, you know, where you from? What's your background? Why do you do what you do? Because I think a lot of that entrepreneurial spirit sometimes comes from a really interesting place. And You know, I always like to understand kind of what drives people, you know, what fire inside of them helps them do what it is that they do day in and day out. So I think that's a good idea, man. We may energize that discussion a little bit later on this year, 2019. We'll see what happens. That'd be kind of cool. I'm going to call them and see what up. So I have a good experience with B&D. B&D is a good one for sure. God, I just had a ton of questions pop in here. Good grief, man. I may have to stretch it a little bit. I know there will be people that re-review this and are like, Jesus, Ryan, let it go, man. But I just really like this content. I really like the live stream. It's one of my favorite things to do. Jeff Koski's here. I'm in Wenatchee, just across from the mountains from Seattle. If anybody's ever been there, man, that's freaking nice. That's a nice area, man. You're lucky. I miss the Northwest. I really do. I think of home every time I think of the Northwest. That's how much I miss it. It's really cool stuff, man. You can have multiple ROS, but still have a max 6K. Good stuff. Thank you. I appreciate that, Brent. He's answered some questions for me. I appreciate it. Teresa Ford. Hey, Ryan, missed you. Awesome. It's great to see you again. So cool. One of those awesome folks that hopefully we helped you, you know, kind of get that stuff squared away. That was a lot of fun for me. It was really a lot of fun. I haven't talked to anybody individually that I haven't enjoyed talking to and helping. They've all been really, really unique situations. The reality of it is I just don't have a lot of time to do it. If I did, I would do it more, probably a little bit more on a compensation basis. So I wasn't just doing free service all the time, because I really do think we're making a difference. And I think from a coaching perspective, a lot of people just need some reassurance. Some people I've talked to and been like, wow, it's a mess. We really need to look at doing this, this, and this. Other folks just needed some reassurance to be like, dang, you're killing it. You're doing really well. Have you thought about this and this? And that's really where the value is trying to align those solutions with different personalities. So it's really good to see you. Thank you for popping in tonight. Really good stuff, man. Cruise on through. All right, it's me. I really like my program portfolio. I agree. I have my safe accounts too. Thank you. That's totally true. You know, my comment to you is to continue to build cash with the current state of the stock market. All indicators are kind of pointing to a natural correction. It's nothing to fear. It's something to take advantage of. The account is built to succeed either way in an up or a down market. You're nice and young, so it doesn't matter. You got plenty of time. The last thing you want to do is freak out and act emotional, certainly. But, you know, looking at an account when the stock market goes up all the time is really about, let's be fair, half of the battle. Okay. It's not fair to look at your portfolio when it goes up every single day and say, I love investing, right? So you got to be fair, because it's going to try you a little bit when it does start to turn south a little bit. And you're stuck in a decision to say, why am I doing this? Why am I into investing? Why am I working so hard only to see my portfolio go down, down, down? Okay. And I'm not meaning to scare you, but I'm just giving you some real talk. I've been around the block a few times. I know how investing and money works. The counter attack to that is to continue to save cash on the side. Only subject enough capital to the market that you're happy with. Only interject the dollar cost averaging program that you're happy with, right? Whether it be $100, $200, $300 or $400 a month. You know, you're one of those high income earners, so you can do that, right? But it just has to make sense for you. Make sure that what you're doing in the stock market, you can counterbalance and supplement over here. If you've listened to anything that I've said tonight about what I'm doing on my strategy, I'm doing a lot of cash right now. I'm just not seeing a whole lot of benefit for me pounding a bunch of money into the stock market and trying to really, really extract more juice than there is to be had. That's all. So really good to have you in the group. It's awesome. Great to see you. I have to watch my emotions. My emotion can sometimes be my worst enemy in the financial markets. I always have to deal with my own emotions and focus on my stock holdings, financial values. That's some real talk right there. It sounds like me. You're not the only one. I tell you what, I'd be naive if I stood up here and said, be stoic, because I say it. I mean, you have to kind of invest like a robot. I've said that many, many times. but it's really hard to do. It really is. To each his own. I would say have a section of your portfolio that you just set a rule on that you're not going to touch. I have that, which gives me a little bit more latitude to be a little bit more hands-on with your other buckets, right? And that's kind of what I do. So if you guys had the invite to the Facebook group, if you'd be so kind as to throw it into the group here, that would help me out a lot. I certainly don't want to take a break here and drop that in. But if you could do that for Quick Notes Media, one of our small business entrepreneurs, that of which I'll be buying her stock when she comes public, because it's going to be worth a lot of money. And that's just what I do. I'm an investor. I invest in success. That's what I do. So you can't blame me. But if you can throw the link to the Facebook group, Brent, if you can help me out with that, that'd be awesome. And if you could throw it at Quick Notes Media, that would be perfect. I'm really surprised you're not in my Facebook group. That just hurts my feelings. But that's all right. We'll get you in there. No big deal. Joe Carlson is a new channel creator that's intriguing. Yeah, I've mentioned him a couple times, actually. So I don't know if it's in response to my positive comments, but yeah, I think he's really good. He's good. I love it. I think it's awesome. Just goes to show that there's a lot of people out there that kind of think like I do. Not the same, but really yearn for that good financial savvy that it takes to succeed in the market. There's a lot of people out there. There's a lot of people out there that don't think they can do it, that absolutely can. So really, really cool stuff. Third link down in the description of the Facebook group. Yeah. That's on all the videos too, Mimi. I think I've got the link to the Facebook group on any one of my videos on the YouTube channel. I got them in the description, I think, on all of them. You can just cruise down there. It says Facebook group, I believe. Just click on that, and we'll get you into the group. It's by invite only, but you're an honorary guest. Victor says, Ryan, you need a donations button through PayPal. Okay, I didn't know that existed. Again, I'm 41. I pulse in with you guys to keep me plugged in to the social media pipeline. So thank you, keeping me honest. Again, if I could get to a live venue and actually talk to people live, that's my passion. I love that stuff. I love it. Yeah, I really foresee that's where this is going. Hopefully, if we can generate a big enough following, we can really start to change some lives and really start to make a difference in the thought process of how we approach money. That's really what we're in. And I'll keep doing this until we catch enough fire to where I'm given enough options to do just that. I really am. So if you hit to join, we couldn't see it. Okay, I did. Thank you. I'm on. Nice. Cool stuff, man. Thank you, Brent, for doing that. I forgot you're an administrator in the group, so sorry. Jesus. Hi, which is the best brokerage to invest between First Trade and M1 Finance for a Roth IRA? So my twist on this, I'm with both. I would really say it would depend on what type of investor that you want to be. I think M1 Finance really has a lot of benefits, okay? I enjoy the platform a lot. I think if you want to invest and be passive, which means that you just invest your money and you let it go and you don't watch it all the time, which is prudent advice for most people. I think a lot of people aren't going to be in that camp of me saying for an active investor, go ahead and go with First Trade, because there is no minimum in that account. It's more for an active trader in that you can trade in and out of stock free of charge. You get free trades. That's wonderful. Okay. But there are some downturns to that type of interaction with the stock market, okay? There is a lot of benefits to passive investing with M1 Finance. There's been a lot of good names thrown out there in the group today. VOO is one of them, VO on the mid-cap side of the house, VB on the small-cap Vanguard side. I recommend everybody go into the Vanguard site and look there. There's model portfolios that are already built on M1 Finance. I believe it gives you 10 options. It goes from conservative all the way down to ultra-aggressive. So take a look at those portfolios. it's going to show you exactly what percentage of allocation your money is going to go in when you basically fund that pie. It's really it's awesome. And when you set it up for dollar cost averaging and you do, let's say, because I'm doing $25 a month right now just to do it. Why not? I don't need to, but I do it just for fun. So I can kind of talk about the functionality. That $25 will go in to fund that entire pie. Okay. So if you have underexposure to one of the ETFs, for example, over the previous month, that $25 will go to buy that underexposed section of that pie. So it's really, really cool. Right below, Money Matters says, I think you are going to tell you M1. I think many are going to tell you M1. Correct. And I really try to fill the gap on what advice I should probably offer to the masses of people, okay? I just still contend that M1 Finance is more for the passive investor and First Trade is more appropriate for someone that's interested in lightning fast stock trades, looking to channel stock, looking to trade in and out of stock, someone seeking alpha, somebody who's willing to do some homework and be more of an active trader. Okay? All right. So make sure that if you do join the M1 Finance, use the affiliate link through the Independent Investor Channel. That helps us support the channel. It'll be in the bottom of this live stream. It's in the bottom of most every one of my videos that I have as well. So that helps support the channel. Thank you for coming in. You'll enjoy M1 Finance. I do. I really like it. It's a cool platform. Initially, I didn't like it, but I was trying to over-extract functionality from it. And I think if you're willing to put money into it and just let it ride, you'll be way more happy as a customer than I was initially when I started to try to trade in and out of positions in it. And I was getting all confused. It was terrible. But become a passive investor and just let your money ride and fund it. You'll be happy you did. So Diego Ferreira, nice. What do you think about the S&P 500? Sounds like a downtrend, doesn't it? I do. I think there's multiple indicators that point toward a downtrend, in my opinion. So buying the S&P 500, whatever ETF you want to buy, whatever index you want that mirrors the S&P 500, that's fine. I would just say be careful, just scale into it. Okay. I'm not recommending taking 10, 20, $50,000 blocks of money and dropping it into this market right now. I think that's silly. There's no way that I could ever justify that type of mentality. Okay. If you had $40,000 or $50,000 to invest in the market, take 10, take 10, buy 40 shares of the S&P 500. That's fine. You could do that. Put $40,000 aside and be happy that you're invested and you're sitting on a pile of cash. But it's relative. If you have $10,000, do the same thing. Take 4,000, put 6,000 away. Take 2,500, invest it. Whatever you want to do. Thanks a lot. What about the company that mirrors him? If I understand what you're talking about, you can select the 10 top holdings in the S&P 500. You could do that, but just be kind of careful, because what ends up happening is the top end of the S&P will overperform. Then the next year or the latter part of this year, it'll underperform. And all the stocks that are underloved in the S&P will actually be the ones that overperform. So just be kind of careful with that type of mentality, man. So let me kind of work up here. Guys, with that, I'm going to kind of start to wrap it up. I just want to make sure that I've hit. Thank you. Yeah, I'm learning the M1 Finance. I'm going to fill up my Roth IRA before April 15th. That's a really smart move. I think you'll be really happy with the product. I really like it's self-directed investing at its best. And that's really what we're about, is empowering those individual investors, man. M1 does a good job of providing you that conduit and connection to the stock market. Furthermore, their model portfolios are built with the majority of Vanguard products. So kind of cool stuff, man. I think you'll be happy with it. If you guys haven't hit the thumbs up button, hit the thumbs up. Help me support the deal. If you are new to the channel and you knew, I didn't even know Quick Notes Media wasn't part of the Facebook group. We've already remedied that. I'm sure she's in there now. it's just awesome to have you guys again back to reinvigorate the conversation. A little bit less than 2 hours. You probably get a little bit more financial savvy. It pulls you in on the stock market, where we are after a week. I will be offering another live stream next Friday if I have the opportunity to do so. Great for everybody. I thank you for sticking with the channel. Again, we're going to continue on doing a once a week live stream. That's going to be your opportunity. I wish everybody the best. Have a great, great weekend. Thanks again for tuning in. Tune in again next week for the live stream. Look forward to being with you guys again. Thank you so much. Have a great, great weekend.